Let's go over gold here. Okay, let's go over this. I'm only going to spend 5 minutes on this, so if you want to pay attention to gold, I'm on gold. All right, guys, let's make this, when you first log in, let me show you what to do. Okay, when you sit down at your trading desk, get a cup of coffee, grab a cup of tea, whatever you want to do, right? What do you do then? How do I trade off these black charts, and how do I trade off J signal? Very simple. And Robert, I'll go over the average true range here and what those dots mean too. What I like to do is at first, I got to establish I'm either going to, the markets only do two things. They go vertical or they go sideways. We're either going to be in a trending market or we're going to be a range or chop. Typically, since I've been trading since the late 1980s, early 90s, we trend 3, we chop 2. This year, we've been trending 4, chopping 1. Some days we trend 3, chop 2. But on the average, you trend 3 and you chop 2, right? So you got to establish whether you're in trend or chop. The best way to do it is moving averages. Now, to me, moving averages are worthless. You can't buy and sell off them for support and resistance. You don't know if it's going to stop at the 200, at the 50, at the 34, at the 20. You know, I don't care if you use a daily chart, a weekly, and a 5-minute chart all confluent at the same level. We're using weekly charts, monthly charts. It's hit or miss. So what you got to use moving averages for is you got to use them for trend direction. If I'm trending down, that puts me in the right mindset to only take shorts. If I'm trending up, I'm in the right mindset to only take longs. If I log in and I'm flat where these moving averages are horizontal, I will sell the high and buy the low market profile in the first test. So I have a plan already to know how to trade trend or chop. Trend's very simple. Trend, if you look on gold this morning, I'm in a hard downtrend. So since I'm in a downtrend, okay, these moving averages are down on these black charts, I have two profiles I trade off of. I got a volume-based over here to the bottom left, more price-based here, this long chart, and that's my profiles. On the upper left-hand corner, I got what's called an average true range chart. So I can base my trades off these 3 charts with trend, just like that. And in half a second, I can know exactly where to buy and sell to the exact bar. How do I do it? What I do is I know this bit longer term moving average is the most important, the magenta. If it's angled down, 35, 45 degree angle, if it's angled down, then I know I'm in a downtrend, okay? I'm not in a chopper flat market. If it's flat as a pancake, I know I'm in a chopper range. So I know on gold that I can't take any longs today off these black charts, only shorts. So I know that I'm going to look for short retracements. My shorter term moving average is crossed down. It's not as important as the longer term moving average, but it's crossed down also. So what I'm going to do is my methodology is this. I know since 1985 that there's 2 setups that have continued to work. It's called a number 1 and a number 3 trade. I have 2 value areas that I post on my charts. I do not post the control point. I don't look at yesterday's control point. I don't look at yesterday's high value, low value area. They're hit or miss. I use what's happening currently today. And I have the high value areas are in red on price profile and volume. You can see they're red right there. They're red. They just called the high on crude here a second ago. They're red. Right there they are red. Red, high value on the price, volume, red, high value area. Then I got low value. Low value are the green. Okay. Then I got this red dashed line, which is called my hedge. All right. If you're in a downtrend, you cannot buy green. My moving averages are in a downtrend. I'm not allowed to buy green. Not allowed to buy green. Not allowed to buy green hedge either. When you're in a downtrend on the black charts, you cannot counter trend trade the black charts. Since 1985, counter trend trading has not worked with market profile, and it still doesn't work today. It's hit or miss. So we got to put high probability positions on. So the only way that I came up with how to do that is this. I want to sell retracements to high value area, the red, with trend. So moving averages are down. The first test of red, price profile is 1125 this morning, and then volume profile was down here at 1123.50. Volume profile came first before it came to 1125. Volume profile is 1123.50 where my arrow's at. So I'm allowed to sell the first test of the red with a pull-in bar on my Renko bar. It's a first test of red. Now, I have volume and price profile. So which one can I sell? If they're 10 ticks if they're within 10 ticks of each other, take the outer edge one. If they're not within 10 ticks of each other, take the first one that you come to. First one you come to. Okay? It came to volume profile, and that called the high. That called the high here, right before 8 o'clock. Volume profile right here, called the high. Number one trade, right there, called the exact high in the market. Consequently, when you come down to the green then, we came down the green, is you don't buy green, you let it break retest. Well, it broke 11, the first one to come to was 1120.50. It broke it, it retested, and that was the number 3 here with the pull-in bar also. So that's called a number 3. A number 1 is a deep retracement to the high value area, which a high value called it. And then the green is called a break retest, which is called a number 3. So if I look over here on J signal, number 1 called the high, and then we had a break retest, and the number 3 called the high with the pull-in bar. That's the only 2 setups you need to learn in this trading room. It's the only 2 setups that I've seen that have worked for 30 years now. A number 1 pullback with trend on high value, because trend is down, and then a break retest to low value. Okay? So that's how we trade the black charts off profile. It's very simple. If I'm in a downtrend, sell the first test of hedge within 2 ticks, maximum 3 ticks with a pull-in bar with a maximum 15 tick stop, or sell the first test of red profile when it comes within maximum 2 ticks of it. If you get pulled in with the Renko bar, you pull yourself in. And green, and when green, low value area, you don't buy low value. That's for amateur traders, right? All those market profile books out there that says buy low value in a downtrend, they're wrong, because I have not seen any low value consistently hold support in downtrends. I just let it break, let it retest, and let the professional money get in it with us. So there's a number 1 called the high. There's a number 3 that called the high. Now, why do I have that upper left-hand chart up here called the average true range? What happens is the market gets out of balance. When it gets out of balance, I got these dots here. These dots are the average range of the market. I got a deeper average range. I got a shallow tracement average range. The shallow retracement average range are the red dots. The magenta are shallow retracement average, a deeper retracement average range. If I see a J signal come up, when it breaks, when the market gets way away from these dots and retests with trend, then I will look for a J signal here when it tests the red dots on a shallow retracement, which it called it twice, it's 2 for 2 today, or a deeper retracement on the purple dots. What happens when these ATRs come up? They like to come up after the number 3 setup happens, breaking LVA or HVA. I see these consistently break, retest after the number 3's in effect. Because what's it tell you? You have no support in the market. And I love it when I get a J signal, which happened over here. Look at my J signal that happened right here on the 3 sim. It happened exactly at, right there, on the retest of the red after I broke low value area. So that tells me I'm in the weakest part of the market, and I'm trying to get a J signal on a shallow retracement red dot. That tells me that the market has a high potential to reverse and go lower. So now you see how I'm using the black charts. I'm using them with trend direction only, and I'm trying to get all the way up to high value on either one with the pull-in bar or the hedge. Or if it's too weak, it won't even get up there, I'll let it break the low value, let it retest, and I'll get a pull-in bar over here. If I'm using the ATR chart up here, you only get about 2 shots at it in the morning. When you get an ATR off the red or the magenta and you get a J signal, you have a high probability trade. They love to react off of it. Now, the cool thing about the 2-minute chart, when it marries up with the 5-minute, you got yourself good. Look how the spread is on the 2-minute and the spread is on the 5-minute. They're both identical trend. So when you both get identical trend and you get that deep retracement to the red and you get a J signal, you get a high probability trade. The best time to take the ATR trade is the first ATR retest after number 3 on LVA or HVA, because that's when it's typically the weakest, right here. Right there. It's your best trade off an ATR. because that is when you first broke low value area, you're getting your first ATR, and that's when it happens the best. Yep, 2-minute time frame. You got it. Right? David, you understand how to work this. Have you been playing off those, David? I know Adam's been playing off of them. You've been watching how they've been marrying up with the J signal? It's gorgeous. It's absolutely beautiful. I mean, when they marry up together, you got yourself one hell of a trade. So that's how we use these charts, guys and gals. So if you're looking today at, if you're a gold trader, you should have taken one of these 3 shorts right here. Let me show you. If you're a gold trader, my system called it today. You should be short here, or short here. They all had confluence. One of those trades right there, you should be short. Number 1 trade. Now, my 5 sim Renko, how you trade it, if you come up to this black line in the sand, because this trend filter on the 5 sim on your own Ninja charts, it works on all markets the same way. I don't care what futures market, stock market, or forex market you trade. You come up to that black line in the sand, and it's with trend, you get a pull-in bar. That coincided with my volume profile over here. I mean, how beautiful is that? I got volume profile stopping it all by itself. I got my J signal stopping it all by itself at the black line in the sand, all by itself, right there. Right there. Confluence. Then I got a breakdown retest on my number 3, which is confluence. J signal that works on your own Ninja charts. Low value is retesting for the first time, and price profile. Then if you missed that, you got a beautiful ATR trade right here. Retested the ATR for the first time with J signal. So if you were short gold this morning, that was it. Go over to crude real quick, Gerald. The number 1 trades are the same thing on crude. I'll shut this off here in a second. Gerald, roll over to crude, Gerald. Thanks, man. Let's look at crude here. Look at my high value area. High value. Now take a look at this. You got to understand this. Here's high value area. What's it say if I'm in a downtrend now? There's high value. You start to understand this. Watch. And there's a hedge. So that's 2 times confluence right there, right? High value is right here. Moving average in a downtrend. So the first test of high value. There's the hedge. Second test of the area. You're allowed to take the second test of the area if it's the first test of a profile. Well, let's just show for purpose to demonstrate how high value and hedge works. When it comes up to it, the same thing. You got to have a pull-in bar. You got to pull yourself in with the close below the doji or spinning top. Maximum 15 tick. Stop. There would be your exact pull-in bar, right? Now, we're not going to have a big trade until, like I said, we break out of these levels. But it's setting up, guys. It's setting up for a huge number 3 today. And it's going to come off of these levels right here. And I'm talking this thing could have around, the first move is around a $500 per 1 contract. It could be a $1,300 to $1,400 trade coming up with oil inventories because we're such in a narrow range. But that's exactly how you trade the number 1. First test of high value with hedge, pull-in bar, right? Now we're looking for number 3. But is there a number 3 off the ATR? There's no ATR trade because we know the ATR trades happens after what setup? Not the number 1. We're not looking for an ATR out of the number 1. It's always at the number 3 with trend. Is my 2-minute trend really trending? Nope. I know I don't have an ATR trade. But is the ATR trending in gold? Yep. Beautiful ATR trade. So you know when the ATRs are coming up because it's hard trend. And 2-minute is marrying up against a 5-minute with trend. That's a beautiful thing about it. Works great like that. So there's a rhythm to it, guys and gals. There's a rhythm. First, the number 1. Second, the number 3. Third, the ATR. That's typically how it works. You get 3 shots at the market every single week.